you know you need to get rid of bad debt from your life. I've already given you the blueprint. Now it's time to be ruthless and accelerate to wipe out your debt. We already know that consumer debt is bad. It affects you on an emotional level. It affects your future ability to buy a home, and it financially drains you. It puts so many holes in your financial bucket that it gets harder every single day to get yourself out of it. We talked about how to eliminate debt in my last video, how to obliterate it, how you can't be an ostrich keeping your head in the sand because that's stupid. Nothing changes and it doesn't really go away until you wake up and decide to deal with it. In fact, all it does is keep you poor until you're ready to tackle it. This video is about speeding up. You've done all the steps and now want to accelerate to becoming debt-free. Just before we jump in, if you're watching this thinking, I want to know how to tackle debt fast, but I'm not ready to do so right now. I want to learn the steps so that when I am ready, I'll be able to do it. Well, I've got a newsflash for you. You'll never be ready. You've got to be ruthless with debt. Financial death by 1,000 cuts, or days, weeks, months, years of interest payments and fees isn't an option. Start now. Some people think about balance transfers to speed up debt repayment. I'm not a big fan of balance transfers at all. These are not really for you if you already have debt and are struggling to pay it off. It's actually only a way to get a small reprieve, a small break, to take a breath before it starts swiping away at your financial health again. The way I see it, if you can take the effort of initiating a balance transfer, opening a new credit card account, going through KYC for it, filling in an application form, agreeing to terms and conditions, receiving your new card, activating it, etc., and then initiating a balance transfer from your current cards to your new one, then you've got enough time to take all the steps I suggested in my last video, which I'll link to somewhere up here if you haven't seen it already. Other than a short pause, and by the way, all the balance transfer offers I've seen tend to come with a fee to transfer your balance in the first place, so it actually adds to your debt pile. I've seen up to 4%, so you'll be charged a 4% fee from the very start. Most of them also come with confusing ways in how they treat new spending on the card versus the existing balances that you transferred to them. And of course, there's a deadline on when the low interest period or the 0% interest period ends. Why isn't it straightforward? Well, simply put, it's not in the credit card company's interests to be straightforward. It's in their interests to make as much money from you as possible. Period. Their slick marketing campaign might tell you a different story, but the number of people in debt rising and the credit card company and bank's profit margins tell the right one. Balance transfers lull you into a false sense of security. They almost give you permission to take a slight pause and then go off spending like crazy again, except this time with their card rather than all the other ones you've had. Decide if you want to take a small break and then continue to spiral down into financial hell, or do you want to take the well-trodden path to sorting out your financial health once and for all, and do it even faster this time? Now, having gone off on that rant, if you are disciplined and are already paying off more than the minimum, then this might be an avenue for you to consider to accelerate your way towards debtlessness. But if you're thinking about using balance transfers as the first step towards dealing with this, and thinking of it as easier to deal with than the cause of your debt, then I've got news for you. Your situation is probably going to get worse. Another option some may consider is borrowing from someone else, friends or family, for example, to pay off your debt. Now, it's important to know that this is effectively a balance transfer, but rather than getting the money from a credit card company, another credit card company, you're getting it from another human being. Now, this is better than balance transfers because there are unlikely to be nasty surprise fees or other unexpected charges, nor any confusing terms, because the person who you're getting the money from, their motivation is not to make more money from you, but they will, in most cases, want their money back. And even if they don't, I'd still want to pay them back. If nothing else, to prove to myself that I've got the discipline to do so. And that's what it comes down to. You've got to be disciplined and agree to pay them back over a fixed term and then stick to it. To do this, you will have needed to take that first step of saying no to any more borrowing, taking on any more debt. Remember, getting free of debt means you have to stop borrowing more first. Otherwise, you're on a path to nowhere. If you believe, you strongly believe, you know that you've fixed the problem with your spending and have committed to paying off your debt and have been doing that for a few months already, then yes, this could be an option. There are risks though. Money is emotional and it can wreck relationships. And a relationship hit by financial issues could take a huge emotional toll on your life. And not just your money life either, on all aspects of your life. This can lead to huge problems later on. So yes, it is possible and better than balance transfers to another credit card in my opinion, but I still probably wouldn't do it. Then there's debt consolidation loans. These can be fantastic to simplify your debt situation. If, like in my last video, you have 6 different debts with different interest rates, say 39.9%, 26.7% and 21%, then a new consolidated loan rate of 19.9% can seem very appealing. And it would be. It cuts 3 of my debts into one and all at a lower interest rate. Simplified and cheaper. What's not to like? This can be a great option to choose. But, and with debt there's always a but. Even if you don't see it, it's always there. But watch out for debt consolidation fees, application fees, introductory interest rates. minimum contract periods, etc. Now, as long as you're watching out for these things and they don't come as unexpected to you, debt consolidation could be a good idea. If you've already started getting your debt under control and are already making overpayments, i.e. more than the minimum amount that you need to pay each month, then this can be a great way to accelerate your journey towards becoming debt-free. Then there's taking money from savings or investments to pay off debt. If you have cash savings and want to do this can be a good idea, and it's very likely to make financial sense. I mean, if you're earning 3 to 4% of savings interest on a cash balance of £5,000, and at the same time you're paying 26.7% on a £5,000 credit card balance, then using that cash to pay off that balance could wipe it out immediately and completely, and save you around £100 every month in interest. So it makes perfect financial sense to do so, and I would do this. Now, don't just leave the video here and go off and do that, because there is an ISA complication I'm going to come to in a bit. Now, if you had that £5,000 for unexpected expenses and an unexpected cost does come up, then in my view, there's no harm in putting that unexpected cost on a credit card. It's unexpected after all, so add it in where you have to. Just an aside, needing a new jacket is not a have-to situation. That sort of thing just doesn't count. If your car breaks down and needs a repair, that might be a have-to situation. I don't like having a contingency fund sitting there in cash for emergencies, whilst at the same time I might be paying hundreds out in debt interest every month. I'd rather stop paying that interest, wipe out that debt, and then start building up my cash pile again. From the money you'd save in stopping paying that debt interest, you might find you could build back up very quickly if you continue to carve out the amount of debt interest that you otherwise would have paid, but this time, obviously you're not paying it to your credit card company because the debt's gone, pay it into a high interest savings account instead. Now the ISA bit. If your cash is sitting in a cash ISA, an individual savings account which has the tax wrapper around it, remember, then if you withdraw cash from this to pay off anything, or withdraw cash for any other reason from an ISA, then you're likely to lose the tax advantages that came with it. But if this was me, I'd probably still do it, because the debt interest payments are likely to hurt me much more financially than the savings interest I would make and the tax advantages that came with it. Now that's savings as cash. For investments, this one depends. If your investments are within a stock and shares ISA or an innovative finance ISA, then if you withdraw any money from this, like in the cash ISA example, you'll lose the tax advantages that came with it. And this might again be okay, but with investments, they don't follow a straight line of growth. You might be in a downturn right now, in which case you might be withdrawing more than you put in, depending on how the markets are doing. On investments, I would leave them where they are for simplicity. Speak to your lender, the bank or credit card company, when you get charged a fee. This can be useful if you've not been charged a late payment penalty or a missed payment fee before, or even if it's only the second time with that lender. Call them, ask them what they can do for you, apologize for not paying, and state that you've been a customer of theirs for a long time. And remember to be friendly while you're doing this. Finance companies spend a lot of money to get customers, and the person you're speaking to usually has discretion on waiving these fees, especially for long-standing customers and friendly ones. If you do get this fee waived, don't just count this as a blessing and carry on with your day, but pay the amount of that fee into your balance for a double win. You might have been charged that anyway, so why not just assume you have been and get to debt-free that much faster? If you've had any sort of issue with your bank or credit card company in the last, say, 6 months and you haven't complained, then you should have. Put in a complaint, no matter how trivial. Use a site like Resolver to make this easy for you. Financial institutions in the UK are normally covered by the Financial Ombudsman. If a complaint isn't resolved, you can escalate your case further to the Ombudsman. But to incentivize financial companies to treat their customers fairly and deal with complaints properly, if a complaint ever is escalated to the Ombudsman, the company usually has to pay a fee. For financial companies, this can be over £600 per complaint. I have found that even when I've put in a complaint about a minor statement issue, a really minor one, I've received financial compensation for it. And guess where I'd suggest putting that compensation if you do receive it? Yep, straight into that debt balance. Only do this if you have a genuine complaint though. The other thing to remember is that overpayments can be made at any time of the month. You don't have to wait until the next statement date to make overpayments. Your automatic payments should already be, well, automated. For example, by setting up a standing order. But if you come into extra money during the month, then pay that into your debt straight away. It will count as an overpayment immediately. And usually, interest gets calculated daily and charged daily into your account, even though you received a statement at the end of the month. So you'll save more that way too. This will speed you towards becoming debt-free. Get more aggressive with your debt. No, I don't mean like that. Cut spending even more than you already have and put that extra money into overpayments. Let's say you were buying national lottery tickets. Then firstly, stop it, but don't just keep that extra money. Spend it. Yes, I said spend it. Not on other stuff, but on overpayments towards your debts. No matter how small or big, everything makes a difference. If you already do the smart thing and get cashback on online purchases, when that cashback comes in and hits your account, pay it directly into your credit card or other loan balance. When you get that raise or bonus or other money that you weren't otherwise expecting, put it into overpayments towards your debt balance as well to massively accelerate towards becoming debt-free. Which ones have you tried or are going to try? Let me know in the comments below and let me know how it goes. I really want to understand what works for you and what doesn't. And if you're serious about eliminating your debt, you'll want to watch this next.